the real cost of delaying a home purchase in today's housing market. For many prospective buyers, waiting to purchase a home can feel like the cautious choice. Mortgage rates fluctuate, economic forecasts shift, and housing headlines often emphasize uncertainty. As a result, some buyers postpone entering the market in hopes that prices or borrowing costs will improve. Yet delaying a home purchase carries its own financial implications. In markets such as Pinellas County, where population growth, limited coastal land, and strong housing demand continue to shape pricing trends, the cost of waiting can extend beyond monthly rent. It can affect long-term equity, purchasing power, and the type of property buyers ultimately secure. Understanding these trade-offs has become increasingly important as buyers navigate a housing market defined by both opportunity and hesitation. Purchasing power and interest rate sensitivity. Mortgage rates play a direct role in determining how much home a buyer can afford. Even modest changes in borrowing costs can influence purchasing power significantly. For example, a 1 percentage point increase in interest rates can raise the monthly payment on a typical mortgage by several $100s. That shift can reduce the price range a buyer qualifies for or require a larger down payment to maintain affordability. Buyers who delay purchases in anticipation of lower rates may find that home prices rise during the waiting period. If both rates and prices move upward, the resulting payment may be higher than it would have been earlier. In Pinellas County, where coastal demand remains steady and available housing supply remains limited in certain neighborhoods, price stability or gradual appreciation can offset the potential benefits of waiting for slightly lower interest rates. Lost equity over time. Homeownership is not only about monthly payments. It also represents a pathway to equity accumulation. When buyers delay purchasing, they postpone the point at which mortgage payments begin contributing to ownership rather than rent. Over time, that delay can affect wealth building. Consider a buyer who waits 2 or 3 years before purchasing. During that time, rent payments continue without generating ownership interest. Meanwhile, homeowners who purchased earlier may benefit from principal reduction and market appreciation. In communities across Pinellas County, long-term homeowners have seen property values rise steadily over the past decade. While future appreciation cannot be guaranteed, historical patterns illustrate how early entry into the market can shape financial outcomes. Market timing challenges. Predicting the ideal moment to buy real estate has always been difficult. Housing markets are influenced by a wide range of factors, including interest rates, employment trends, migration patterns, and local development activity. Pinellas County provides a useful example. The region's coastal amenities, employment centers, and relatively limited land availability often support steady housing demand. Even during periods of slower national market activity, local factors can maintain price resilience. Buyers attempting to wait for a clear bottom in pricing may find that market conditions change gradually rather than dramatically. By the time signals appear clear, competition may increase again as other buyers re-enter the market. Insurance and ownership costs. In Florida, the cost of homeownership extends beyond the purchase price and mortgage payment. Insurance premiums, property taxes, and maintenance obligations all influence affordability. Some buyers delay purchasing because they are evaluating these expenses. However, waiting does not necessarily guarantee lower ownership costs. Insurance rates and tax assessments can change independently of housing prices. In Pinellas County, rising insurance premiums have become a widely discussed issue among homeowners. Buyers evaluating long-term housing decisions must account for these expenses regardless of timing. Delaying a purchase may reduce immediate exposure to those costs, but it also postpones the benefits of ownership and potential property appreciation. Lifestyle and stability considerations. Financial factors are only part of the equation. Housing decisions often intersect with personal stability, employment changes, and family planning. For some households, homeownership provides predictability through fixed mortgage payments and a stable living environment. Continuing to rent may offer flexibility, but it also leaves tenants exposed to periodic rent increases and limited control over housing conditions. In competitive rental markets throughout the Tampa Bay region, annual rent adjustments have become common. Over time, these increases can narrow the financial gap between renting and owning. A long-term perspective. Real estate markets move in cycles, but homeownership decisions typically unfold over longer time horizons. Buyers who focus exclusively on short-term rate movements or price fluctuations may overlook the broader financial framework of owning property. In regions like Pinellas County, where demand for coastal living remains strong, long-term trends often outweigh short-term market shifts. Waiting can be a prudent decision when buyers need time to strengthen credit, build savings, or clarify personal circumstances. But when the delay is driven solely by attempts to perfectly time the market, the financial outcome is far less predictable. The bottom line: delaying a home purchase can feel financially cautious, but the decision carries opportunity costs that are not always immediately visible. Changes in interest rates, housing prices, and rental expenses all influence the long-term impact of waiting. For buyers evaluating their options, the key question is not simply whether the market might improve. It is whether postponing ownership aligns with their financial readiness, long-term goals, and the realities of the local housing market. In places like Pinellas County, where housing demand remains steady and supply constraints persist in desirable areas, timing the market perfectly is rarely the deciding factor. Preparation and long-term perspective often matter far more.